Hello everybody, this is Bitcoin, and in this video guys I'm gonna go straight into the TA of things. Maybe I'll give a fundamental sprinkle, just like talk a little bit about several things, and then I'm just gonna make another video guys where I'm gonna go through the data, through more stuff like long short ratios, the Ethereum grid index, and several other things that are pretty nice metrics for us to see where we might be right now. So the first thing that I'm going to talk about today is going to be the total market cap. Then I'm going to go through Bitcoin, Ethereum, and some major altcoins, some of them versus Bitcoin, some of them versus USDT, because there are a lot of things that I want to cover. In my opinion, there is still hope for the bull market, although this might be a dead cat bounce that might just get higher than most people expect initially, and then we might fall lower. But in my opinion, the best approach right now is to just take it step by step, and I'm just going to explain my reasoning behind it. Now, a lot of that stuff that I'm going to say guys, I've said it on Telegram, I've said it on Twitter, or I've said it on TradingView. You know, there has been a lot of content that I made the other week where I actually shared a lot of different charts and a lot of different stuff on YouTube. I made 6 different videos, 6 hours long, on how to catch bottoms and how to catch tops in these kind of situations. So I would suggest that you can go back and watch that stuff, because it wasn't really just focused on the current situation, because it was more like educational content for people that are more interested in learning how to react in the future as well in similar situations. Now please remember guys to like the video, also click the subscribe button and the bell icon right next to it. Also remember, you can share the video with people that you think they might find it helpful, and the same thing you can do with the past videos that I talked about, because there is a lot of educational content in there. And you can also just leave a comment down below, tell us what you like, tell us what you didn't like, tell us what you would like to listen in future videos, because I just try to make this as educational as possible and try and help as many people as possible. So if there's something that you want more clarity on, I'll be very happy to provide that content for you. So let's get straight into it guys. Enough with the introduction, and let's go into the crypto market cap first. I'm looking at the total market cap guys, because in my opinion that's a good representation of how things are going and where we are right now as a whole. Because in my opinion, just looking at Bitcoin or Ethereum alone doesn't mean much, especially at the current situation, because Bitcoin was already correcting. We had certain coins do very well, but Bitcoin was already showing signs of weakness, and maybe we are paying that kind of price. Because what happened was, at least in my opinion, we had a very healthy uptrend, especially after Bitcoin started slowing down a little bit around the 44k. We were about to have a very significant correction, but we were not really allowed to correct, because then some really big buyers started stepping in, a lot of newcomers started coming into the market from the GME pump. So the whole situation with Wall Street bets, Dogecoin, Elon Musk and stuff like that kind of forced the market to not have a pullback, because with Tesla, MicroStrategy and other companies buying, we had an accelerated pump because we had big companies throwing money into crypto. However, that money was just money that would just come in, and it wouldn't just maybe flow back instantly. So we wouldn't have a continuous influx of such large sums of money into the market. And what happened was that a lot of people started speculating too hard on the future of crypto. So there was a lot of use from perpetual swaps, futures and so on, tons of leverage in the market, and that's part of the reason guys I had this massive correction. Now I still can't tell you guys whether this is the final top, or just a short-term correction. However, I would mostly expect the market to at least at some point go a little sideways. Maybe we do go up to the almost 2 trillion market cap mark, maybe 1.9, and then drop lower. Who knows? But in my opinion, for now, if we are in a bear market, it's going to be a lot shorter. If this is a bull market, still I would expect some consolidation, because I find it very hard to believe that we're gonna go straight up and like just up only right after such a big drop. I would expect a little bit of consolidation. I would expect a shakeout of the really weak hands and then, you know, maybe some really strong hands coming back into the market. Now, the fact that we had that very nice pullback all the way back down there, it kind of flushed a lot of the excess, it kind of flushed a lot of the leverage, and it has made the market a lot healthier. Now, maybe the market needs to correct even more, because when we have froth to the upside, we have, you know, capitulation to the downside, we have very negative stuff happening, because at least the crypto market moves in very big booms and very big busts. Okay, now of course I'm not expecting this to be like the 2018 bear market, because the situation is very different. The market right now is a lot healthier, a lot more steady. We're reaching global adoption levels, and we're slowly getting more and more attention, so more and more money will be flowing in slowly. I think the belief in crypto is not going away, so the only people that we're shaking out are the people who are, in a sense, the more like speculative hands, the more people that got in just for the money. And we saw a lot of these people come in, especially to the latter part, or even just a few people to just speculate too much when it came to Shiba Inu and a lot of these really shitty coins, to be honest, because they are not good quality coins. They were just random stuff. Not that the other coins are of extremely high quality or that 90% won't go away in the future. However, at least there is some substance, and a lot of the investors of those coins just look at them in the long term. Whereas with Shiba Inu, it's more like a cash grab. It's more like people trying to get rich rather than people actually believing that this is the future of finance. There's a big difference between those two things, guys. So it's not that those coins actually brought the top, but they were more, at least in my opinion, big signs that the market was degrading and it was degenerating. So everyone was turning into degenerate. People wanted to just make as much money as possible, so they started using more leverage. They started betting on riskier and riskier coins because the other coins didn't provide them with the returns, and then we paid the price, because that usually comes towards the latter end of the bull market, or at least maybe in that phase of the bull market, because like I've said before, I do believe there are phases in the bull market, and maybe things are a little different this time around. And the reason that things might be a little different this time around is because maybe we have the rise of Ethereum as the king of the crypto market, rather than having Bitcoin as the king of the crypto market, which would change a lot of things. But these are things that I'm going to talk about fairly soon. Now, the fact that the crypto market fell by 50%, to me, it's more than enough. For now, at least, I don't really expect for us to make new lows straight away. Maybe we do, but I would be kind of surprised. I would kind of expect the market to come anywhere between the 0.5 and 0.618 ratio on the Fibonacci, potentially maybe come anywhere in between. For now, we have a little bit of resistance here because we are pulling back after a really big drop. So maybe we do come back down to this level right here, to the 1.5 trillion market cap, and then go higher. But like I said before, this retest of that pump, essentially that was right after have broken out from this very huge consolidation area that lasted for about a month, which is very impressive. So Bitcoin was dropping, alts was slowly rising. We tried to have a breakout, then we had that breakout before the Elon Musk pump happened, but back then Bitcoin was not in the best state. Then it started rallying more and more, but it showed signs of slowing down, and that was mostly, like I said before, because the market ran too far ahead of itself. Now I'm gonna say some stuff pretty soon that might not be very bullish. However, I just try to give you guys the most honest opinion on both sides. Currently, we're in the middle of nowhere. There is nothing really in here. We just, in my opinion, it's best to stay flat rather than rush into a position right now, because it's better to just get a better sense of where we might be or where we might be going. So either you want to short if the market goes higher from here pretty quickly, or you want to go long if the market drops again just a little bit, but doesn't really show signs of collapsing once again. So now that we had this gap filled and we haven't really had anything else in the past that would need to be retested, maybe we are ready to go even higher, because I just feel like if the market cap only essentially went up 220% from the previous top in January, that's a little too little. In my opinion, that's just a tiny number, and we have seen very massive corrections before, like this one or this one right here. So it's not the first time that the crypto market cap drops by 50%. So if I look at this, maybe it was 45%, maybe it was a little bit less. But again, I just feel like TradingView doesn't really count the market cap very well. It's not the best way to look at it. So the drop was actually larger than 51% potentially, and it just comes down to, at least I'm using this chart because I feel it's a little cleaner, but it's not the best. So let's get into some of the indices that I have, guys, because maybe they are a little bit more helpful. So with my indices, it's almost like we came back down to the lows of February. Now, this is not the perfect index, and I'm not claiming that this is anything more than just me trying to estimate the market cap. But in my opinion, it's very hard for me to believe that we're going to go back down to where we were in September or even like November and December for alts straight away. I find it very, very hard to believe that this is what's going to happen. Of course, that's different from the total market cap. This is more like the altcoin market cap, which dropped 65% in this index. That usually doesn't happen in a bull market. However, again, the key thing to remember here is that the big difference between this bull market and other bull markets is that we have a lot more leverage this time around. We have all these futures, have all these products, have all these coins that kind of have contributed to the really, really sharp drop. Okay. And of course, we have had that anomalous increase in the price because some big players were getting in, whereas the previous rallies were more retail driven and had a different sense to them. Now, the other thing that you can look at least that I'm gonna show you guys, is that we came all the way back to those highs when I'm looking at the same index in Bitcoin terms. So we hit that high and then we bounced very, very high. Now, maybe that was not visible in the Bitcoin dominance. And maybe, guys, the way Bitcoin dominance looks right now is not as bearish, at least for altcoins, as I initially thought. Okay. And I'm just going to talk about this in the future, but maybe alts do have some hope here because of Ethereum. Maybe Bitcoin doesn't do very well. Maybe Bitcoin falls even more in terms of where it is right now. Even if we get into a bear market and Bitcoin keeps falling, maybe Ethereum keeps gaining more and more ground due to EIP 1559, which is a major, major catalyst. So just be aware that my expectation about Bitcoin going even higher could be wrong. Now, Bitcoin kind of bottomed right at the place when it had that correction, when it hit that level right here, almost got down to the 40% Bitcoin dominance, which is one of the lowest points that it has had over the last 3 years. And that's why potentially we did bounce. Now, if I look at the same thing on CoinTrader Pro, where you're gonna see that the market cap is different. So it's very hard for me, guys, to just give you the best quality data because there isn't really a way to use a proper index. Again, the drop was really sharp. It fell down to a very, very significant level, which was almost the same level that we hit back in June 2017. However, alts are showing a lot more strength this time around than they did back then, because alts haven't had the magnitude of the increase that they had back then, plus their fundamentals are a lot better than they were back then. Whereas Bitcoin is kind of in a tough spot because Ethereum is scaling, Ethereum has a lot of attention with DeFi, with NFTs and so on. And I just feel like a lot of people are still selling Bitcoin to get into Ethereum, and we're going to talk about this right now. So when I'm looking at Ethereum, guys, I see a very healthy bounce here and a very, very nice engulfing candle. That's very, very nice because this has engulfed 2 different days. Maybe it's just a dead cat bounce again. However, the fact that we swept that low at 1,900 and we also swept several lows on other coins, on other markets like the perpetual swaps and futures as well. You know, the fact that we came all the way down to a key area that hadn't really been retested if we zoom in, like the 1860 and the 1730 level. Whereas, for example, all these highs, and especially that all-time high, were consolidated below 1,400 and 1,400 for quite some time. Then after we had that pump, we had a very strong retest, we had some nice consolidation. So the market didn't really go up in a frothy way. It didn't go up in a mania. At least at the first part, it was a lot more stable. Whereas it just started accelerating too much as we kept going higher, which was what I think was when the very unhealthy part started. And there was also an unhealthy, in my opinion, correction right here, because Bitcoin was dropping but Ethereum kept going higher. So Ethereum didn't really fully correct to come down to these areas, because if Ethereum had come down to, let's say, 1,700, 1,800 before going to 4,400, it would have been a lot different. At least that's the sense that I get based on my experience and the stuff that I have observed. Now, of course, it did get into a parabolic rally, and that's why it collapsed. However, Ethereum is still in a bull market, whereas Bitcoin kind of isn't. And the key thing is that Bitcoin is below its 200-day moving average, while Ethereum is still above its 200-day moving average. Ethereum is still above its all-time highs and above some very key levels like the monthly pivot. It's also above the weekly pivot, which was also very healthy. It shows, at least in the short term, that we have a bullish bias, a bullish trend. It's also above the R3 yearly, which we don't really want to see the price close below. And also it just retested a very, very important level, which was the volume profile high volume node at 1,800. So the market kind of gravitated towards a very, very special area, which had initially been tested in some of the perpetual swaps. So for example, I'm just going to give you Deribit as an example, first of all, because that one and several perpetual swaps fell all the way down to 1,800, whereas on some other markets like spot markets, the market had bottomed higher. So when we see that difference, usually the market does tend to pull back down to those levels and retest them or sweep the low before going higher. Okay, so it's a nice sweep at a very important level, because we had a lot of accumulation or reaccumulation in that area for about a month and a half. Ethereum was not doing very well back then, and now after coming down to this area, maybe we do regain some strength after having a little pullback. Okay, so there was also that little area right here at 2,400 that I forgot to mention, but it wasn't probably as important as some of the other ones that I mentioned before. But the key thing still remains that we're still above the all-time high. We've still had a nice consolidation. We haven't really formed any like really bad structure that looks very bearish on Ethereum. At least Ethereum still looks more bullish than Bitcoin, in my opinion, because again, to me, it does matter where the price is versus some of the moving averages. Now I'm going to go through Bitcoin first and then go to Ethereum BTC and maybe some other charts like Cardano or Uniswap to just talk a bit about some of the major altcoins right now. So let's go into the Coinbase chart for Bitcoin. And currently Bitcoin is trapped below its 200-day moving average. It doesn't look nice. I don't really like the fact that we have tested the 300-day moving average again and again. Although it didn't really exactly touch it, we have been near that area of about 31 to 28k. I don't like that stuff because we also had an anomalous dip in Bitcoin as well. So if we look, let's say, at the Binance Perpetual Swap, you can see that we swept the lows on that one or on most other ones, but we didn't really do it on spot prices. So sometimes when we get that first sweep of those bottoms, sweep of the double bottom, which is very nasty. Like, I don't really like double bottoms because they usually get broken at some point. And this one got broken, although it took quite some time. It did get broken. I also don't like in Bitcoin that we've been breaking those lows in this fashion. We keep breaking lower. We've been forming a proper downtrend that has been lasting for quite some time. we retested those highs here and fell lower. That support of 42, 43k turned back into resistance. So for now, at least, I would expect more of consolidation in this area, maybe a little reaccumulation and then go higher. The key areas that I will be looking at is 47k and maybe 53k. If we get up to 53k, it probably means that we're in a really good situation, probably back into a bull. That would potentially mean that Ethereum is back at 32k, 3,200. But for now, it just doesn't look as great. So I'll be a little bit more cautious, okay, guys? Because here are two things that I mentioned in the previous videos, which again I do highly recommend you guys go back and watch them. Which is that when I had this drop right here, we did fall below a lot of the moving averages back then, but we were in a bear market essentially. So we're already dropping rather than coming out of a big increase. Okay, so we came down to a very important level. We retested 41k, which had never been retested, or at least I apologize about this. I should turn this into the Coinbase chart, because I had the perpetual swap on. So it came back into an area that in my opinion was very crucial. It came back to an accumulation area and not just a support area that had been tested several times before, and it was kind of begging to get broken. This was more like kind of that level. It was begging to be retested, because when you have such big increases and such a nice breakout zone like this one, which was resistance and turned into support, that's a different structure. That was after the market had already dropped a lot, whereas this time around the market dropped a lot after going up a lot, which is very different. However, if I start seeing something like this and I see the market pushing higher, I do believe this is going to be pretty nice. Okay, now for example, if I put the 300-day moving average on this chart, that was the 300-day moving average was broken, and then we fell much more. Okay, so the market was extremely oversold compared to what we are right now. We are oversold. There are metrics I'm going to talk about in the next video that show that we are oversold. However, I just feel like the structure is not the same, and it's not as bullish as back then, because again, right here after the second pullback, we had a very quick pump, at least. So if we start breaking 42k, then that brings me a lot of hope. So we're not that far away from breaking above some key levels. However, the problem is that, for example, again, right now we have broken below R3, whereas back then in 2020, we had just tested the S1 pivot. I don't have it on right now, so just let me put this on. So we had just retested this pivot right here, which was great support, whereas this time around we've lost a very important pivot that usually, when we lose this, when we fall back below R3, it's usually a signal that we are back into a little bit of a bear market, okay? Because at least in my experience, and especially like we saw with Ethereum, you want to see R3 get tested and then the market to just continue higher, not really come back to some of those levels, okay? So for example, the R3, when it got retested back here, it didn't really go back down or just retest, it just flew higher, whereas Bitcoin has shown weakness and it started falling below R3. And the other thing is that for Bitcoin, we have tested the 300-day moving average, guys, several times, and that's not a good sign. It's not a good sign, at least in my opinion, because if I go back in history and see when we did touch the 300-day moving average before, in a bull market at least, every time we touched it, we kind of dropped really hard. And we had initially had a very sharp bounce like we had in February of 2018, but that was just a dead cat bounce in a bear market. So the price doubled back then, but it had already fallen about 70%. And then with that bounce, we slowly started fading once again. So just keep in mind, guys, that touching the 300-day moving average is not the best thing. Clearly, Bitcoin has been moving lower and lower. It has been breaking some key levels. It's not looking as healthy, at least not as healthy as Ethereum. But maybe we are in a bit of a mix like in this situation. So although we have touched these levels, the fact that yes, the lows were swept on some of the exchanges is good to an extent. So maybe we can consider that double bottom broken. We might also consider this as not being a proper second touch, or just like kind of ignore it a little bit in our analysis. So I'm still kind of hopeful, because again, these are just some details that sometimes they come true, sometimes they don't. Maybe it's very healthy that we go to this level and we shook out all the leverage. Now some of the big players can step in again without being too worried about, let's say, the market being too high. It kind of provided them with a nice opportunity to step back into the market, which is something that I think people shouldn't be ignoring. Now we can also go back and look at other times, like I said before, where the 300-day moving average was tested, and it hasn't really been that frequent. But whenever it kind of came back to that level, it was pretty much over. The only time we kind of touched it, and we didn't really touch it, on some exchanges maybe we did, was at the beginning of the bull market in 2016, right after the halving and with the Bitfinex hack. But of course, there was a catalyst for that. Bitfinex getting hacked was one of the largest exchanges back then. It lost a ton of coins, so that was a bit of a shock. Plus it came back down to a reasonable area that should have been retested anyways. So other than that, most of the other times that we have seen the 300-day moving average get touched, even in that little bear market in 2019, we did see a pretty nasty correction afterwards, although initially we did get a very, very sharp bounce. Of course, I'm not talking about the initial phase of the bull market like in June here as well, not around the halving, but I mean after the bull market has already started. Now maybe guys, we are in the similar phase like in April 2013, that we went really high really fast and then we needed that extra correction. Maybe that was the correction that we kind of needed for the money to come flowing back into Bitcoin from altcoins. I don't really see that yet because altcoins are showing a lot of strength, but in my opinion we would probably need some sort of catalyst for Bitcoin for the market to keep going higher, because for now the main catalysts we have are for Ethereum, because Ethereum keeps on gaining more and more traction through DeFi and all that stuff. So although yes, less people are going to be using Ethereum, let's say if we are in a bear market, however there is more and more adoption due to the Ethereum 2.0 upgrade coming from EIP 1559 and so on. Again, like I had mentioned in the previous videos and some previous analysis that I've made on YouTube and elsewhere too, something to keep in mind is that Bitcoin has had pretty nasty price action, in my opinion, partially because money has been flowing out of Bitcoin and into Ethereum. Okay, so for that transition to happen, for Ethereum to become, let's say, the king of the market, I didn't really expect it to happen just at very high prices or without any volatility. For that to happen, we do need to get that extra volatility. Maybe we also need some of the money from the altcoins to flow back into Ethereum rather than maybe Bitcoin. So rather than having the usual typical stuff where we have money flowing from Ethereum into Bitcoin or from altcoins into Bitcoin in general, now we have money flowing from Bitcoin into Ethereum slowly. But for now, this is what I am seeing. Maybe my observation is wrong, but let's have a look at Ethereum, Bitcoin and some other coins, guys, to just see where we might be standing at the moment. Because when I look at the long-term Ethereum chart, we do see that Ethereum has been showing a lot of strength. It has formed a very nice base versus Bitcoin. I've talked about it a lot before. We've had a tremendous amount of accumulation in this area right here. Okay, at 0.3 or a little higher, and after forming this base, I do believe that Ethereum maybe it will come back down to this area and then go higher, because this sort of little double top that I have right here is going to get broken. So Ethereum, in my opinion, pulled back to kind of what might be seen as the fair price of 2018, because we did have a lot of excess, and that was probably a more realistic price for Ethereum at the time. Given how much money had flown into ICOs. Of course, there was a big bubble on Ethereum at the time. It didn't make any sense. It was quite irrational. It had to do a lot with the flows of Ethereum into ICOs, and also Ethereum was really young at the time. Whereas this time around, the market is kind of different. There are a lot more coins at the same time. A lot more coins are sucking money out of Ethereum, like kind of sucking value out of it. We have the issues with the fees, which have improved a little bit, especially after the correction, because people have stopped using Ethereum. But the two crashes that we've seen did show that there are some major issues with Ethereum currently. So of course, the Berlin hard fork did help quite a bit, and I do believe fees will come down slowly, especially with the excess speculation going away, and then we're going to go into some reaccumulation. I did mention in the previous videos and some analysis that I made that this could potentially be the initial nice support. Maybe that was the bottom, guys, and we do have something like this happening, okay? Because I do feel like this is pretty symmetrical. So we have that nice first drop, then we have the bounce, then we have that capitulation, then we do have all that sideways movement in a sense, then we have that nice increase again, so it's very symmetrical with the other one, then we have a very symmetrical drop once again. So in my opinion, it's just a very nice move that happens very slowly and steadily. It seems very healthy. It seems like there is no froth in these moves, at least for now. Of course, maybe Ethereum does come back down to this level, but once it pulls back down to this very strong base and it comes back down to the 300-day moving average, which it has been tracking along with this trend line right here, Ethereum could potentially break higher and then eventually come and flip Bitcoin. Because even now, it was about 50% below flipping Bitcoin, so it needed just 100% extra to flip Bitcoin, which isn't really too far away, given especially how it went there and that a Bitcoin could be falling more. So it might be a lot easier for the flipping to happen at lower prices. Okay, at least to me, it would make a lot more sense as people are selling. They sell all their assets, and then when they are about to reallocate them, maybe most of them are going to be putting most of that money into Ethereum. Now let's look at UniBTC, because I saw something very interesting there that I want to mention and talk about. So this is a very sharp bounce, guys, really sharp. I think this could be potentially a sign that yes, the bull market might continue, because we have had sharp drops before in altcoins. Altcoins tend to have those excessive moves up and down. So for now, I would say there's probably going to be another pullback. There's going to be some consolidation after this really sharp bounce that came over 200-day moving average. And that's another thing, guys, that you should be looking at. When you see something drop like this, the first thing you want to look at after a crash is to buy the 200-day moving average. And that's exactly where Uniswap bottomed. Now, Uniswap had a very interesting price action where it tried to break above the all-time high it had versus Bitcoin in September. It failed twice and then it failed very badly. But of course, also Uniswap has a lot of positive things going forward with the transition onto Uniswap version 3, and it might do very well at some point. It might be one of those tokens that actually do well even in a bear market, because at least versus Bitcoin, there might be a few tokens that do well, especially now that there is more and more attention into altcoins, and especially ones that have tested a certain high many times, because this might just form an interesting, a weird maybe cap and handle pattern, but it wouldn't be impossible to see it. Maybe we see the same thing with Sushi. We also saw that bottom right at the 200-day moving average. And for now, it also swept those lows here as well. And after that, we might see it go higher. Now, maybe we don't, maybe alts have topped for real. But if we just test the 200-day moving average again, that's not a good sign. Now, another one that I kind of liked was Kusama versus USD, because we saw it retest the 200-day moving average here as well. Now the structure doesn't look great. It doesn't look great. So in my opinion, for these things to continue higher, we might need a little bit of a consolidation right here before we consider any move up, because we have had a very sharp drop, a very sharp bounce, and usually that results in more consolidation or potentially continuation to the downside, because right now we have clearly gotten into a downtrend. Maybe the downtrend was very short and it's already over, but I would just be a little bit more cautious with my place right now, guys. Okay, it's just something to keep in mind. I just want to show you this stuff just very briefly. Maybe we can talk about Cardano as well, because I mentioned it before, and just touch a little bit on BinanceCoin too. Now, whenever I see that breakout and then the market comes all the way back down, it's just kind of weird. I don't really like it, but at the same time, it's not as negative. Like, I wouldn't be surprised if Cardano goes a little bit of sideways. Maybe it wasn't really ready for a big breakout. Maybe it was just the flush of the leverage, and then we go higher. But again, here I feel like we're in the middle of nowhere. If you were to buy the dip, you should have bought the dip. If you didn't buy the dip, now you have to wait a little bit to gain a bit more clarity, because sometimes patience is key. Sometimes it's better to wait rather than rush into position. Now, Cardano versus BTC, it's kind of different because it looks still pretty bullish, okay? And that's another thing that I'm noticing with some of the alts, which might mean the situation is different for now. Maybe some of them do very well. Maybe they have an extra bounce versus Bitcoin. Maybe some of them are in such a strong adoption curve in general and sucking money out of Bitcoin that are pushing Bitcoin lower slowly in kind of like a leechy way. So they are leeching out of Bitcoin. But for now, I'm not really seeing, at least versus Bitcoin, anything extreme for Cardano. I just feel like it might go into another period where it goes sideways in this area before going higher. Of course, Cardano didn't really test any key moving average right here. It almost came up to a very important level right here. That was the level that it was chopping before it really dropped. That was the level that it was closing back then. It came almost all the way up to that level back in that period. So it almost stopped where it was the main top back then. Of course, that was really crazy back in the day, but it came back down to the level where it found support. A little bit of support initially held, but once it lost that level, it crashed down. So the key difference is that this time around, it's been going up very steadily. It's been coming off a strong accumulation. So that's why, at least with some coins, I do struggle to see how these coins would just collapse. Same thing with BinanceCoin, not to the same extent, but even this one, it's showing some strength that we haven't really seen in a while. Now for BinanceCoin, because it went up too much too fast, maybe Binance Chain has some issues, maybe Binance has some regulatory issues. I'll be a little bit more careful, especially after such a massive crash, whereas Cardano has shown a lot more strength. And now if we go into a proper bear market, which does, for example, look like it's the case when I look at something like BNB for now, maybe we do get all the way back down to $30-50, maybe even less, I don't know. But for now, I would say that the best target for BNB, if we have a bear market, is about $150. So that's it from me, guys. That was quite long. Again, I have another video coming pretty soon, so stay tuned. Please remember to like, share and subscribe. Just press the bell icon to get more notifications. Also remember to follow me on Telegram, TradingView and Twitter as well for more updates, more ideas, more short-term stuff. And I wish you all the best. Be careful out there. Don't over leverage, guys. Please remember not to just buy too much. Just buy as much as you're willing to lose, and don't use leverage at such times when there is no real clear direction. So once again, thanks a lot for watching, and I'll see you on the next one.